You deserve to be the best dividend stock investor that you can strive to potentially be. So in this video, I want to talk to you about tips and tricks to make you an incredible dividend stock investor, things that I look for in dividend stocks. We got a lot of valuable information to talk about in this video. So just thank you for stopping by, and if you're new to the channel, make sure to subscribe and turn on post notifications so you don't miss out on any future videos coming out Mondays, Wednesdays, and Fridays. But enough of this talk. Let's just go ahead and get straight into the video. So the way that this video is going to work is we're just going to be going over two different slides. If you stick with me, just trust me, by the end of this video, you'll be a way better investor just like that. And we'll go over all this different stuff that we talk about on different sites to give you that hands-on visualization. But here, first up, some tips and tricks that will make you a great investor. First up is delayed gratification, and then you'll see it says DRIP, and that stands for Dividend Reinvestment Plan. So what this means is please don't just take your dividends and start spending them. If you get, for example, $2 back in dividends, put that $2 back into the company that paid you that dividend, so the next time you get paid even more in dividends and you own more equity in that company. So reinvest them and it will just pay off in the long term, definitely, for sure. Next up is only invest in what you understand. If you don't understand a company's business model or how a company makes money, don't buy into it, even if you think that it could double your money. Because if you don't understand it, you're probably investing in the wrong things, and you're probably assuming that this investment can do something that it really can't if you don't actually understand what the company does. So make sure you know where your money is and why would you want to buy a company that you don't know and you don't understand. Next up is don't be afraid to sell a stock, and even if that means taking a loss. Like, everybody makes bad investments, and so if a stock you own falls down, reevaluate yourself, reevaluate your investment, and if it means taking a loss, just cut your losses before they get worse. Tax loss harvesting, so there always is a little bit of upside when it comes to selling a stock at a loss. It can help you write off some taxes, which is a good thing. But don't go out there just selling stocks at a loss so that you can write off all these taxes, because that's probably not a good strategy. Next up is quality is more important than quantity. Now, just what I mean by that is, take this example. A person investing $1,000 and making 10% returns is doing better than the person with $10,000 making negative 10% returns. You need to invest in companies that are quality rather than quantity. Like, you don't want to put 100 different stocks and put $10 in each different one. You'd rather focus in on the ones that are truly going to make you the best returns and focus in on that. Diversification is key, but I don't think that too much diversification is the best. I think it's great to have diversification, but have a balanced amount between diversification and selection. Next up is staying consistent and don't quit. Now, literally, if you have not done this already, I strongly advise you to, is just set some goals and literally write them down, or put them in your notes on your phone, put them on your laptop, whatever it might be. Just set some goals and don't let anything stop you from achieving these goals. Now, those could be personal goals, investment goals, but in this video, I'm just talking about investing goals as a whole. So some of those goals that I like to set for myself are portfolio size, how much dividend income I want to make monthly and annually, amount that you will invest periodically, maybe it's every week, every 2 weeks, every month, whatever it might be. Write those goals down and start just taking action, and have dates on these, portfolio size. Maybe you want to have a $100,000 portfolio by the end of 2022. So literally say December 31st of 2022, I want a portfolio size of $100,000. Put a date on it, because goals without dates are honestly just they're not goals. You need to set a date on them and make sure you're being consistent. Let's go ahead and talk about key things that I look for in dividend stocks, and once we get past this slide, I will show you everything that you need to know hands-on. First out is the payout ratio, and payout ratio is pretty much just the amount of profit that a company earns and comparing it to how much they're paying out in dividends. So if a company has $100 in profit and they pay out 50 of those dollars in dividends, that's a 50% payout ratio. But if a payout ratio is really high, like anything above 80%, it's not necessarily a deal breaker, and it must be very sustainable and a very reasonable reason why they're paying out. Now, before the comment section says, well, REITs legally do have to pay above 90% of their taxable earnings. I understand that. I'm talking about individual stocks, not REITs in this. Next up is strong cash flows. The dividends you are paid are cash payments. So the companies you invest in need to have strong cash flow and need to be able to manage their cash properly. Next up is I want to see if they have a good valuation. Hopefully they have a low price to earnings ratio. It's preferred, but it's not necessary. You just want to make sure that this company isn't just like being pumped up and it's almost like in its own bubble. You just want to make sure that it's doing pretty solid and relatively good value. Next up is you want to have good historical revenue and earnings growth and also good expectations for the earnings and revenue growth. So revenue and earnings need to have been increasing year over year while analysts are expecting them to continue increasing. Next up is just the analyst overall sentiment. That's news in the markets. Are institutions buying or selling? Are analysts saying there's a good price target on this company and all that good stuff? And lastly is the historical price action and outlook of the stock. Now, for example, if a stock has just been falling 30% over the past year, you need to evaluate, is this stock going to kind of continue this downtrend? Is it a bad company? Or can it pick it back up? And maybe if a stock is uptrending and it's up 30% over the past year, is this stock super high valued? Is it about to get corrected? Or is it still of good value and can it continue this uptrend? Now let's go ahead and get into the sites and give you that hands-on. Now, the stock I want to just show you guys is Starbucks, ticker SBUX. This is one of my only food restaurant stock that I own. And you see it's down over the past year. Let's go ahead and get talking about what we just talked about. So first off is the payout ratio. And Starbucks has a really good payout ratio, 57%, which is pretty solid, 56.79% to be exact. They have a really good dividend growth rate of 16%. You can see they've been increasing their dividends for 11 years. So this definitely passes that first check. A really sustainable payout ratio, really good stuff. Now, next up, we talked about cash flows. Is this company making good cash flow? So in order to see that, you just go to a company's cash flow statement. And the big things I look for is operating cash flow, which is how much cash the company is making from their day-to-day operations. So for example, Starbucks, how much money are they making from selling coffee? How much money are they making from selling sandwiches? That's operating cash flow. And I just like to see their end cash position. Do they have cash on them? How's that going? And next up is the free cash flow. That's kind of just everything. Gives you the whole almost picture of everything. So they have $4.5 billion, increase from 2020, increase from 2019. Really good stuff. 2018 was insane levels, but they've been kind of going in a little bit heavier on investments. Especially some Starbucks news has gone on recently with their expansion plan. So it is a year of spending. But let's go ahead and talk about the valuation on Starbucks. How is their valuation? So their PE right now, their forward PE is 28. That's a lot better than a lot of companies. 28 is relatively well, especially kind of almost looking at the valuation that we're getting in right now. The stock used to be $126. Now, I'm not saying because the stock was $126 a few months ago that it's going to be $126 for sure again. There is no guarantees in the market. But I'm just saying, relatively speaking, buying the stock at $97 and looking at the intrinsics of the company, it can definitely get back up here. So I do believe right now Starbucks is at good value. Now let's talk about the historical and expected earnings and revenue growth. So let's talk about Starbucks' past revenue. To do that, you just go to the income statement and you see how has their revenue done. 24 billion to 26 billion, 23 billion. 2020 was a rough year. We all know COVID, so different things, but still starting to recover and really good things. How's their net income doing? Increasing, doing really well. So I really do like to see that. Now let's go ahead and see what are analysts saying. In order for me to see this, I just go to Yahoo Finance and I click on analysis. From 2022 to 2023, expectations of growth in earnings from 344 to 399, sales growth 12% growth and also 9% growth, which is very solid numbers. Next up is looking at the analyst overall sentiment. So what are analysts saying on the stock? You just look up the price target. You literally look up the ticker symbol, so SBUX price target. You'll find 28% upside is relatively what the average price target is. 6 buy, 7 hold, 1 sell. What about institutions? You can see a lot more institutional inflows, which is buying, compared to outflow, which is selling, which is really good stuff. And then just look up the news. Literally look up why is Starbucks stock down? Because if you can see, 116 to 95 just in this past month alone. And the main reason I found was pretty much just because of the economy. And so it does give me that validation that this is not an intrinsic factor, this is an extrinsic factor. And right now is a perfect time to buy. And you can just see a lot of good expectations right here. Just go read the news. What are people saying on the stock? Now let's go ahead and talk about the last thing, which is the historical price action and overall outlook. Over the past year, Starbucks stock is actually down. It's down 1%. And that's kind of because of this major dip right here. Year to date, it's down 16%. Do I think that this stock can continue to kind of almost come back up? Because over the past 5 years, it's still up really good amounts. And from me just looking at the overall intrinsics of the company, the valuation, the money that they're making, the expansion plan, I do believe that this company will turn around and start to make way better returns, especially in the long term. And I think right now is a good time to buy. So those are just some key tips and tricks and different things to look at in dividend stocks that will make you a better dividend stock market investor. So everybody, that's going to wrap it up for this video. If you enjoyed it, make sure to give the video a thumbs up. And if you're new to the channel, subscribe, turn on post notifications so you don't miss out on any of those future videos. Thank you for making it all the way to the end of this video. Leave a comment below if you have any other tips and tricks you'd like to share to everybody in the comments. We always like to hear your guys' input. So again, thank you so much. Check out M1 Finance if you have not already. Sign up using the link in the description or pinned comment down below. It'll say M1 Finance. You click that link, you deposit $100 into an account, you get 50 free dollars. That's free money out there. You can use it, invest it into stocks. You can take that money out, do whatever you want to do. It's free money, so make sure you go check out that promotion. And again, thank you so much, and I will see you at the next video.